Hello everybody, welcome back. Let's have a look at Bitcoin and we'll do some other videos throughout the day, some altcoins, and we're doing our live stream tonight, so join me on that if you're a member of the Telegram, not the Telegram, the Patreon. And to be honest, if there's ever a time to join the Patreon, it's usually at the beginning of the month, because it runs on like a monthly payment system, so it's like an automatic payment thing. So if there's ever a time to join, I suppose you get your money's worth if you join at the beginning of every month. Anyway, other than that, let's have a quick look at Bitcoin. So still technically in its downtrend, right? But even though we're leveling out again, as far as the lows are concerned, we've got a very neat level of resistance here. I'm just going to put it down for the sake of it. We're talking about candle bodies. You can see we've got bang, 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 bang. I'm not going to keep that there, but just for reference, I suppose that is 34,600. So that seems to be where the current lows are being tested. Doesn't mean that we can't come down further than that. The main thing, the line in the sand for me here is about 33,000, and that corresponds to, if we go over to the weekly, we see the green 50 exponential coming in at around about that level. It's actually going up a little bit actually at the moment. Still got an uptrend on it, ever so slightly, because we are above it, and that's how moving averages get their shape and trajectory. So basically that is the deal for Bitcoin. So long as we're above this, I'm actually okay with it. And we've seen on a long-term chart, a 10-year chart, that the vast majority of the time, even when we look as though and to be honest, even when we do come into a downtrend bear market, we do hit this trend line, and we do bounce from it quite significantly. This is probably the weakest bounce I've ever seen from it, even though actually if we think about where we landed this time round, we did have a bounce of about 22%, but that's nothing in comparison to what we've seen in the past. We've seen 100% bounces from them, to be honest. We've not got anything like that yet, and that's 100% bounces from bear markets. So that's a classic bear market situation. Big crash back, a huge bubble pop crash, and then an enormous relief rally. We haven't had that. So obviously I'm never one to measure previous price action and say that this is how it's happened before, this is how it has to happen again. But as far as supports and resistances are concerned, I do look at historical price action in that respect. So I'm not saying that I'm looking for 100% bounce because we did it in the past. I'm just saying that every day above this is still a reason to celebrate. So that is the weekly. The weekly is basically the same as it's been for the last couple of weeks at least, and this is the daily. So the daily, unfortunately, still in a downtrend until we break above this 10 exponential moving average, to which we've tested it a few times now, been rejected from it, a few times, even including today, we've been rejected from it. Now breaking above there, this orange one here is the 10 exponential, is what I'm referring to. Breaking above there should actually cause a move up to around about 40,000, maybe even a little higher, 41, maybe even 41 and a half to perhaps maybe 42. I know that I'm stretching those out, but the reason for that is that we've got these three moving averages here. We've got the center of the Bollinger Band, that's the 20, we've got the 21 EMA, and we've also got the 200 exponential moving average there. So each one of those is probably going to find a rejection, to be honest with you. It probably will find a rejection, and that's perfectly normal. Each one of these are very strong levels of resistance. They're very significant moving averages, which is why I have them on the chart. And we've used these in the past for supports. Now we're going to use them as resistances. But breaking above them and closing above them will cause further continuation, maybe even going into a sustained uptrend. But for the moment, we're not even getting above the 10 exponential. So we are trying, and it's slowly leveling out. But obviously, if you think about what's really taking place here, is price going down, moving averages going down, each one of these being a resistance that gets lower and lower each time. That's why it's a downtrend. That's why it will be a downtrend until these start to get reclaimed. So I'm not massively bullish on it, but yeah, bounces from when we reclaim these zones. So if we broke above and closed above, especially on a daily, this 10 exponential, which is about $37,500, a closure above there on a daily should have a continuation up to the next one, which is as of today, it's $40,000, and that's the center of the Bollinger Band. So if we have a look over here, we've got a MACD cross. This is the sort of thing that people get excited about, and obviously there's reason to be excited about something like that. However, I have to say it's pretty weak, but it is happening. It was inevitably going to happen at some point, but I mean, people have spoken about this. I've heard people talk about this. The MACD is the lowest it's ever been in its entire life. Exactly, and it has to at some point snake up from there. I mean, it's the lowest it's ever been. But for me, that thinking of something like cryptocurrency as particularly oversold, especially when it was so high. It's not really a buying opportunity unless you're looking to, I suppose, accumulate, which is what I am doing. I am accumulating in this zone, but it doesn't mean that I don't expect it to come down lower. I don't know. I really don't know where it's going to go from here. As in the next few months, it could go higher, it could go lower. Usually, in an accumulation zone, it goes up and down, quite significantly. And I think on a few videos back, I was talking about this accumulation range being as high as almost 90%, a 90% range. So if you're accumulating within a 90% range, you could buy the bottom of those lows. If your dollar cost averaging was on the right day, you could buy the high, and obviously suffer the consequences in the short term. Long term, in my opinion, is there is only one direction, but it depends on how you decide to play this long term. Which, like I say, it should perk up by the end of this year. But until then, I really honestly do think that there's going to be a relatively long, drawn out period of accumulation take place in quite a large range, meaning that you're going to have days where everybody's super bullish, you're going to have days where everybody's super bearish, and it's just going to frustrate the hell out of everybody. And that's fine. If it is accumulating, which it looks like it might be, but it doesn't mean that it can't break down from here and accumulate even lower, or basically go into an actual bear market, which we're not confirmed to be in a bear market right now. But if we were to go into a bear market, obviously we're going to go down a lot further, maybe another 50% from here, and bottom out and accumulate probably between 12 and 16,000. In my opinion, and that is also fine, like I say, because if you're looking at this through the same lens as me, it's to try and get as much as you can at the best price, but also not be too picky about what it is that you're doing, and focus on how much Bitcoin that you're buying rather than the best price that you're getting it for. In a way, I suppose, it's probably the same lens as an institution. They want to get the best price, but then they're not going to be watching the 5-minute chart to make sure that they get the absolute spot on bottom. Their goals are pretty much long term. So and overall, I would expect this to heal. Time is a great healer. But right now, it is kind of like catching a knife. Because like I said, there is a very realistic chance that we do break down from here and go down to 20 and then go down to 16 and maybe even down to 12. That is a bear market, and again, because we haven't confirmed the bear market, kind of play the range that we're in. So that is Bitcoin on the daily, but we'll have a little look on the 4-hourly to see if there's any glimmers of hope. And there kind of is, but it's also very much an accumulation type vibe going on here. As you can see, as we broke down here, for the first time we consciously broke above the center of this Bollinger Band and then broke down below it and broke above it. We are still downtrending, but this is what accumulation begins to look like. It looks like, again, I'm just drawing this in just for fun, but accumulation is where there is no real potential edge. We have moving averages, which is what we normally use to spot strength of trend, direction of trend, and at the moment on the 4-hourly they're all kind of melding together, and they look like I don't know if I said this, or I say it on the live stream, so I actually don't know if it's the appropriate thing. The thing that the Ghostbusters have is the proton pack. The moving averages shoot out at the end of their proton packs. That's what this looks like, and it gives us no edge. It means that an accumulation, hopefully, that will break out eventually. But until it starts to form a significant uptrend or maybe even downtrend, you have to put your trust and faith in the zone that you're playing here, and again you're buying into the proton pack beam. Don't cross the streams. As they say, but I mean the streams, as far as the moving averages are concerned, they're all crossing, so it is a matter of buying into faith and trust that this is going to go up at this level, and not get too picky about where you buy it. Now I'm talking about my own strategy here, not anything that I would expect anybody else to adopt, because my the way I view all of this is much more in the long term. There's elements of trading, I suppose, that take place on this channel, but certainly in a downtrend like this, not quite so much. It's more about collecting the Bitcoin like Sonic the Hedgehog collecting rings, and we can easily bump into a bunch of spikes and lose those rings and have to start picking them up all over again, starting from scratch. And that analogy is basically what I'm sort of talking about, is breaking down from the $33,000 level, then doing it all over again. I mean, like any trader, you have to just play what it is that you're playing. And for most people, I think in a downtrend, the most appropriate way to play this, especially if you're playing with small amounts of money and you're not prepared to short, which I generally, I'm not a big fan of derivatives anyway, but especially when you're in an area like this, it's extremely volatile and neither here nor there. There's no edge on it really for long big moves. So, I mean, it's a matter of playing the ranges. So, we've been playing these ranges, buying these dips. Hopefully, each one of those would bounce. And I suppose it is dollar cost averaging. So we take profit on the uptrends and we buy on the downtrends in increments. Each one of these attempts to buy has turned out to be wrecked. It's turned out to be wrecked, but again, it's okay to get wrecked if you're doing spot trading, especially with my kind of strategy. It's about accumulating as much as possible, and there's been a fair amount of accumulation, I can tell you. Down at these low levels here, this is where obviously the accumulation zone, where it was so obvious, and again, once we started to perk up again from the coronavirus dump. There's been a lot of profit made, and that profit is now being bought back into Bitcoin at lower levels. So it's okay to get wrecked in increments, considering how long I've been playing this and how much profit has been made throughout the last couple of years. It is a matter of dollar cost averaging, I suppose. Whether it's, I suppose, from your fiat or for me. The profit that I've been making and taking, especially over the last few months before this really picked up pace. But anyway, I mean, that is Bitcoin for you. It's kind of neither here nor there. But if I was to make a guess on it, based upon the 4-hourly kind of being in this this wedge that's reaching an apex, it looks to me like perhaps maybe over the next few days, I would favour a larger move, not very large, but a slightly larger move to the upside. Perhaps maybe when we get to the bottom of this wedge, we may find a bounce of potentially around about 14 or 15% over the next few days, and that's all it would be. It would be a bounce, and that would be based upon reclaiming this 10 exponential moving average. But again, I'm not massively in favour of an up or a downside move. When you're in this range, we have to accept that we are still in a downtrend until we reclaim this 10 exponential, and that will only offer us a small glimmer of hope to be rejected from a potentially a 7% move, 9% move, or at best an 11% move from reclaiming that 10 exponential. It can happen though. It can happen, and if we have a look at even on the lowest term time frames, which we would never do, even the hourly has a very strong area of rejection on the 200 exponential. So this is why I suppose moving averages are so important. We have had moments where we broke above, and come back down. But essentially, there's many areas to reclaim on many time frames. The most important ones for me is obviously going to be the daily, and the thing to hold on to is the fact that the weekly is still holding up on this level. Anyway, that's enough of Bitcoin for now. If you want to join me on the live stream tonight, it'll be about 8:30. We normally do it, and the link's in the description below for basically every group and chat and anything that you could possibly want. And other than that, hope you have a nice day and take it easy.